Hello everyone, this is Zach here from Sifu. So first of all, thank you for joining us in this section over here. Okay, just let me hold on a second. Okay, okay. So all right. So for those who are joining us in this section over here, appreciate if you can help us to click the like buttons for me. Help us to share this out. All right. So again, a quick disclaimer before we start. This section here, we are not doing any buy and sell calls. So if you want to trade any stock based on discussion in this evening, make sure you got your own trading plan. If not, get advice from the professional. Okay. Now today, this topic over here is regarding the impact that we see in the market recently, which is the US tariff. So as we know, markets have been hit badly not only in Bursa, I think in overall global market as well. So today again we have Dato Yu over here to share with us on this topic, US tariff. But in this section, we're going to focus in the furniture company in Busan, Malaysia. So Dato Yu, I'll pass the floor to you to start our section for tonight.
Okay. Before I start, let me tell you this sad story. I think I've lost about 15% since 2 weeks ago. Okay, my investments in both the US and Malaysia have tanked. And what I'm going to share with you is based on personal experience. I think is the word I would use. I've also have investments in Bursa Malaysia furniture companies, so I won't tell you which one. Okay, and unfortunately, some of my furniture companies have big exports to the US, so there's going to be a lot of pain. Now, the things that I would share with you is the analysis that I've been thinking about over the past week in terms of how to look at what's happening in the market. And I base it on my personal experience because in the 90s, I was running a furniture company. We were doing furniture it's a furniture and steel company called Kenzan. It's today called FACB Industries. And we were exporting metal furniture, metal bunk beds and steel pipes to the US. And at one point, the US steel sector took anti-dumping action against Malaysia. And we ended up with something like 30 to 40%, tariff duty, import duty, which is basically like a trade tariff. And I will tell you that within 2 months of the duty being imposed, your sales goes to zero. Okay, the U.S. Customs has a rule that after the tariff, let's say that your tariff starts tomorrow. Now, anything in the port, in the ship, I think the U.S. Customs give you some grace period so that all those in transit, they don't count the tariff. But anything that you start shipping after the deadline, your tariff kicks in. And when the tariff kicks in, your importers stop straight away, okay, because nobody can afford to pay the 20 to 3%. So I've gone through that experience, and I will share with you some of the things that we talk of and we look at. And I suspect some of the furniture companies in Malaysia would also be thinking along the same lines now. The second thing that I would like to share with you is that I'm a long-term fundamental investor. So I buy companies and hold for about 8 to 10 years on the basis that the stock price is trading below what I call the intrinsic value or business value. Now, with the disruption happening in the market today, two things happen. The uncertainty would affect the discount rate. So even if the profits are not affected, the discount rate goes up and the value of the company drops. At the same time, because of the disruption, the cash flow and earnings are also going to be disrupted. So you have a double whammy. Your discount rate goes up, your profits goes down, and your business value drops. So the challenge now is how do you assess your business value given the uncertainty to make sure that even though the prices drop, as long as it's still your business value is still below the market price, you still hold up. But if your business value drops to such amount that it is lower than the market price, then you cut loss. So that's the two I guess, personal experience that I will build into the discussions today. Now, what I'd like to do is firstly give you an overview of the furniture sector. Then I will do a deep dive into two of the Bursa stocks, Pohwat and Laihen. Okay. Now, the Malaysian furniture industry, the bulk of it is actually wooden furniture exported. We are supposedly one of the world's biggest exporter of wooden furniture. Okay? And 80% of the production is exported. So for those of you who think that the Malaysian market can absorb what is not being exported, there's no hope lah, because the Malaysian market is not big enough. Okay, and if the export market tanks, I think the furniture companies are going to be in trouble. Now in 2023, the Bursa companies, the Bursa furniture companies, exported almost 10 billion, okay, of their products. Okay? Now, when you look at the furniture companies on Bursa, there are more than 2,000 companies in the furniture sector. Okay? They account for about 1/3 of the total Malaysian furniture production. That means they are 60 to 70% of the furniture produced by non-listed companies. Okay? So the production of the furniture in Malaysia is quite big. Okay? The listed companies doesn't represent all the companies in the furniture sector. Now, of the 2,000 furniture companies, there are 5 of them where more than 50% of their revenue goes to the US. Okay? And this is the companies that I will focus on. Now, the furniture sector, although it is a growing sector, has not been a fantastic sector over the past 15 years. When I look at the performance from 2010 to 2024, you find out that revenue on average for the sector only grew less than our GDP growth rate. Okay, so it's about 3.6% compound annual growth rate in revenue over the past 15 years. Now, when you look at the profit after tax, okay, and the blue line shows the industry average, I will call it. The gray line is what I call the quartile performance, and the brown line is the lower quartile performance. You find out that when you look at the long term, there was hardly any growth in the industry profits. So the profits last year was just a bit more than what it was 15 years ago. Okay? And you can see that there were 2 peak periods, 2016 and the 2022 period. And when you look back to see why there was these 2 peaks, you find out that in 2016, the furniture sector benefited from weakening of the strengthening of the US dollars. Okay, so the US went up from went as high almost as 460, 470. Okay, and that boosted the profits. And then in 2022, okay, although the forex helps a bit, okay, the bigger boost came from what I call the home sector in the US, where the housing sector had a boom in 2022. So when you look at historically, the performance of the furniture industry, okay, depends very much on the US housing sector and depends very much on the forex rate. Okay? And when you look at what they invest to drive the profits and so on, it is a very sad story that over the past 15 years, the average return on equity, and just looking at from an investor, the return on equity last year was lower than what it was 15 years ago. Okay? Looking from the performance of a company. Okay? Forget about quantum, what I call dollar profit, look at the returns. Okay? So the industry as a whole, okay, delivered declining returns. And this is before the Trump tariff came into the picture. So it is a very sad picture. And the sad picture is that when you look at this metric called gross profitability, this is actually gross profit divided by total assets. This is a metric made famous by one US professor who studies show that this is a very good predictor of the returns of stocks. Okay, it is a much better predictor than price to book value. So I always look at this metric to see if there's an upturn, because if it keeps going down, then I think your stock performance is going to be. So when you look at this and you know, hey, it's a downtrend, I don't think 2025 is going to be a good stock performance as far as the financial sector is concerned. So it is a, what's the word? A sad picture, long before Trump started his tariff war. Okay? Now, the only sad part is that when you look at the margins, okay, the left chart shows you the margins for the industry. There's not been very improvement in the margins because because cost has gone up over the years, okay, and what the gross profit margin shows you is that the sector have not been able to pass the additional cost to the customers. It is a tough sector. The sector doesn't have pricing power. Okay, so as the cost goes up, the margin gets squeezed. Okay, similarly, and the cost is because, if you remember what happened over the past couple of years, we're going to have this minimum wage. We got increasing electricity and so on. So the sector is actually saddled with higher and higher costs compared to 15 years ago. Okay? And they are in an industry where they have difficulty passing the cost to the end buyers. So it is a tough sector. The only good sign is that if you talk in terms of the financial position, the industry today is much stronger than it was 15 years ago, both in terms of leverage, and you look in terms of the debt equity ratio now. So the picture before the Trump war is that the financial sector was going through a tough period, okay, and I think the tariff is going to make it worse. Now, when you look at the financial sector in the US, okay, the US market size, this is about 2023, 2024, it's about 230 billion. The imports into the US is almost 30% okay, of the market is supplied by imports. And the local US industry, okay, at the moment, from what I can gather, is about 60 to 7% capacity utilization. So in theory, the US manufacturers can actually make up for some of the shortfall if they can actually make the furniture cheap enough to replace the imports. Okay? So it is this is different from some of the industries that's been hit by the tariff, in the sense that some of the, if you imagine that if you are coffee, and you're a coffee maker, the US don't produce coffee. So even the tariff on coffee is going to cause a lot of problems because there's no substitute. Sorry. But when you look at the furniture, there is capacity, okay, for the US to actually make up for some of the shortfall. And this is going to weigh heavily in terms of the options available to the Malaysian manufacturers. Now, when you look at why the furniture has been imported into the US, the biggest reason, of course, is cost. Okay, the Walmarts, the Home Depot, and all the people, okay, who are buying furniture and all, they are buying it because they are catering to a lower end market where cost is important. Okay, so if the US furniture manufacturers are not able to even produce the furniture at the imported cost, then we may have some room to negotiate. Now, there are some design and craftsmanship issue, but I don't think this is not luxury goods. Okay, I don't think we get marks for furniture design. People are not importing our furniture because we have the best design in the world. Okay? It is basically a cost-driven industry. Now, the capacity constraints is not across the board. So certain states, because the furniture is not widely distributed, so certain states, especially those are coastal ones, may have some benefit in importing, because in the US the internal shipping costs are quite expensive. So if you're an exporter serving the coastal cities, for example, you could still beat the US manufacturers if they are in the middle of the country, okay? Because the shipping cost is a big factor in the US. So it's not so clear cut now, so it depends on who you're supplying to, what you're supplying for, okay? But despite that, it is a challenging time. Now, the biggest importers at the moment to the US is Vietnam, okay? And they are hit with 46% tariff, followed by China with 34% or even higher, depending on what happens next few days. And of course, Canada and Mexico, okay, are the two ones. Malaysia is relatively a small player, although in the Malaysian context, in terms of the Malaysian furniture industry context, it is a big two industry. But in the context of the US, it is actually a very small player in the US furniture industry. Now, the Bursa furniture companies, okay, when you look at the top 5 with exports in the US, okay, this is SHH Resources, Lai Hian, Po Huat, Rong Kian, or formerly known as Latitude, and this new company, okay, Synergy, which is basically recently don't have as much history as the other 4. Okay? And when you look at their 2024 revenue, this is their total revenue, okay? And this 4 accounts for almost 40% of the Bursa furniture revenue for that year. Okay, it is a sizable. So the 5 companies, okay, account for a sizable part of the furniture sector output. Okay, and when you look at the US contribution, the red line, okay, so here, for example, Lai Hian here, the green column is the total revenue. The red line here shows the total amount that is actually exported to the US. So you will look at these 5 companies, Lai Hian, Po Huat, and Rong Kian. A big part of their revenue actually goes to the US. Okay, Synergy is a bit lucky, half, and SHH, although it's a much smaller one, big part of their revenue goes to the US. So looking at this, I will zoom in on Lai Hian and Po Huat in terms of what is going to happen to them over the next couple of months and next couple of years. Now, to frame my discussion, I will refer to the Fundamental Mapper. And this is the app where we position companies based on the business performance and the investment risk. So the business performance is on the horizontal line. So on the right here means companies with the best performance. On the left are the companies with the worst performance. The top is investment risk. So the higher you are here, is the more risky it is in terms of investment. The lower it is, the less risk in terms of investment risk. Okay. Now, when you look at these 2 companies, you find out that they are among the strongest, in terms of business performance. That means basically, the vertical line here represents the sort of a halfway line. The companies to the right, okay, are the best performing. Those on the left are the worst performing. So you see that Po Huat and Lai Hian, okay, are among the slightly better average performers. And when you took in terms of the investment risk, comparing the current market price, this is about a week old, the current market price against the business value, okay, they're still relatively cheap compared to the asset value. Okay. Now I will show you that I think that over the next year, okay, or next couple of months, the performance are going to shift to the left, okay, and I'll explain to you why I think so. And depending on how the market react, they will become more risky in terms of the margin of safety. Okay. Now, when you look at a company with 95% of their sales to the US, and you are going to be hit with 24% tariff, okay, one of the things that I think the US importers is going to talk to them is, can the Malaysian party absorb some of the tariff? Okay, so it is one option for companies to do that. They may not be able to absorb all, but absorbing some tariffs to make it easier as a short-term measure, okay, while the Malaysian government negotiates down the tariff barrier, could be one way to keep your factory running. Okay. The other alternative, and I'll explain a bit why more, is that the US, this is actually Trump's idea. Okay, the tariff is idea, and at the moment the US Congress and Senate doesn't have much, or at least he doesn't have much opposition. But if the economy gets bad, in 2 years' time, there's going to be a midterm election. And if the Democrat wins, I think there'll be another tariff. Okay. Now, the worst is, of course, in 4 years' time, I think that if Trump leaves, there will be a new tariff plans. And so as a company, you may say, hey, if I can withstand 4 years, worst case, and run it up for 4 years, everything will go back to more or less a bit normal, okay, in 4 years' time. The question is, can I do something to survive the 4 years? Okay, so waiting out is one option. The third one is, of course, can I export to other non-US markets? And I'll tell you a bit more on why this could be challenging. If I were them, I would look at shifting production. Singapore has 10% tariff. Now, if I have some friends who are in the furniture business in Singapore, can I do some temporary reproduction? I ship some of my semi-finished goods to them for them to finish and they export out of Singapore so that we need pay 10% tariff. So shifting production to the 10% Singapore is something that if they don't explore it, I think they are not looking at the full picture. And of course, if this is going to be a long-term problem, can they relocate some of the operations to the US? Okay. Now, I will imagine that the furniture companies should be exploring all of them. Okay. And of course, from top to bottom, indicates the time to implement them. Okay. The absorption of tariffs is the fastest. You can do it tomorrow. Investing and shifting production takes time. Okay. And at this stage, given the uncertainty, I don't think anybody should discount any of these options at this point in time. So let me run through some of the thoughts that I have for these two companies. And to do that, I will share with you some of the current business performance because that will give you an idea of whether some of the things are practical or not. Now, when you look at tariffs, for example, okay, assuming that they absorb the full tariff, okay, it will cost Bohwat 114 million. Okay, it will cost Lion 154 million. Okay. And if you look at the average profit a year, it's only 50 million. You and I know that nobody is going to absorb 100%. They may be able to absorb 20%, 30%, okay, and reduce the profits. Even if they, let's say, they don't make money, they are not able to absorb more than half. Okay, so the only good thing is that if the Malaysian government can go and negotiate with the US and bring the tariff down to, let's say, 10%, this may be an option for them to absorb half, for the importer to absorb half, and then pass it on to the end consumer. So the tariff cost at the moment is not something they can do, but I suspect that eventually they may have to absorb some, okay, and negotiate with the importers so that the importers absorb a bit and then pass some balance to the thing. But this is a very likely scenario. Okay? But if they follow this, it means an impact on the profits on the short term. And the only way to recover the profit, is to see whether they can increase the sales volume or they reduce costs. Okay. Now, the challenge with Bohwat and Lion is that when you look at the last 2 years' profits, they're only generating 5% return on equity. There is not much room for them, okay, to play with the profits, to play with the tariffs. So even if they want to, there's a limit to what they can do. Okay? Now, when you look at the cost structure, okay, the fixed cost here, I'm not talking about labor cost. This is the overheads and the depreciation. So about 70% are about 30%, 20 to 30% are depreciation costs. The rest are what I call fixed overheads. So both of them has about something like 40 to 50 million fixed costs a year. Okay. Now they can try to reduce that. Okay. But I don't think the fixed cost is going to go to zero. So they're going to have maybe, lucky 20 to 30 million of fixed costs, okay, to absorb each year. If they decide to cut production and don't produce anything, they're stuck with 40, 50 million of costs. Okay? The good thing is that both companies are cash rich. Okay, so you imagine if Phuoc can reduce its fixed cost to 30 million, it can withstand several years. Okay, you have enough cash to withstand several years of losses. Okay, and the reason I'm exploring that is because if you're going to lose money, okay, and I'll explain a bit more later. One of the options you want to say is, hey, what happens if I stop production for 2 years? And instead of losing money by selling, can I just cut costs and then, when the market goes back, I come back and start over again? Is that something viable? Okay, and I won't be surprised if some companies are exploring that, okay, as one of the options. Now, the challenge with them, of course, is that they only have about 15% gross profit margin. Okay, so it goes back to how much they can absorb. Okay. They definitely cannot absorb more than 15%. So the 15%, whatever tariffs, whatever you negotiate, okay, is about a cap that they can absorb. Okay. So if the tariff remains unchanged, they're in trouble. Okay. The only hope they have is that somehow they can get the tariff reduced, or they can get work with somebody to help them reduce the tariff barrier. Now, the industry is such that the break-even is quite sizable. Okay, so when you look at the break-even level, it's about 70% of the last year's revenue. Okay, so they cannot afford to reduce revenue. If they say, I don't want to sell, or I cut down my sales, okay, not only would that be an impact on terms of less profit, but they will probably go below break even very quickly. So they don't even have much maneuvering space in terms of reducing production. Okay, so they are caught in a position where they must operate at least 70% of the current capacity. Okay, if they don't do that, they will lose money. So it's a question of which is the best way to lose money. Okay. Now, when I look into details of the customers, both of them have very strong customer. Sorry, Phuoc especially has a very strong customer concentration. So 3 customers account for almost 2/3 of Phuoc's revenue. In the case of Laihan, 3 customers is about 40% of the revenue. Now, it can be a pro and a con. A pro means that if they have a long relationship with the customers, then I would suspect that they would then be able to talk to the customers and say, hey, look, can we start talking and see how we can share costs, share the tariff costs? Can we talk about how much you can pass to the customers, and we work out something together? Okay, because the smaller the customers it is, the easier to talk. Okay, now so I see this actually as an advantage. Okay, in that they only got a few customers to deal with. If they can tackle the 3 to 4 customers and find a cost sharing formula, they can then continue to run at full capacity. Okay, and minimize the impact on them. Okay. The point is that even if they can do that, the issue is that there will be an impact on the profit. There's no running away. Now, you may then say, hey, can they export? Because when you look at the 20-odd companies in the Bursa sector, about 3/4 exports to non-US sector. Okay. And the global market is quite big. The US only accounts for 1/4 of the global market. Okay. The challenge with that is that if all the 5 people who collectively has about almost 40% of the revenue in 2024 decides to go to the other markets, you can imagine the competitive pressure. Okay, if they dump prices, the existing non-US exporters of furniture would also feel the threat. So it's not just the US furniture sector that's going to be impacted. I suspect that people like Po Huat and Lai Hian will start looking at the non-US buyers, and this will then provide competitive pressures to the existing Bursa furniture exporters. Okay, so overall, I think the Malaysian furniture sector is going to face a challenging period, not just the US exporters. Okay, I suspect that the US exporters are going to start looking at other countries, and that would then drive competitive pressures. So it is not a straightforward story, in the sense that if your company today, if you invested in a furniture company that does not export to the US, it does not mean that you're home free, okay? Because the US exporters are going to come into your market, I suspect, okay? And that's going to give you competitive pressures. Same thing, if today a bulk of your business are to the local market, you can imagine the exporters trying to also enter the local market. So it would be good for the consumers, but I don't think it's going to be good for the manufacturers now. So I think there are, and I expect second level impact on the other furniture manufacturers. Now the option is, can I share tariffs? Okay, that means I cut my profit margins. This will impact my profits. And the only way to recover is whether I can increase my productivity and efficiency. That means I try to run my factory more effectively. I try to cut my costs so that I make up for the shortfall. Now, when you look at the past 10 years of contribution margin, so the contribution is basically selling price minus variable cost, you find out that the margins has been relatively flat. The cost has been going up, okay? And this suggests that the furniture sector doesn't have, these two companies doesn't have much track record in improving productivity and efficiency. So if you think that they're going to recover the costs, the tariff costs, because they're going to run more efficiently, history says that it is going to be very challenging, okay? They don't have a history of improving productivity or cost reduction. Okay. Similarly, when you look at in terms of asset turnover, okay, capital efficiency, okay, can they run it with a more linear capital? Okay, the capital efficiency is going the opposite direction. If there was improvement, asset turnover will go up. Return on equity assets would have gone up over the past 10 years. It's not. It's going in the opposite direction. So the industry does not have a track record of improving productivity and efficiency. So any cost impact on them, okay, any reduction in profits because they are going to share the tariff cost, okay, they're going to have a very difficult time trying to recover it through better productivity or efficiency. So it means lower cost. The only two good signs that I can think of them is that they don't have a lot of borrowings, so they don't have to worry about interest charges. The leverage is low, okay, and they have what I call a very strong cash position. That means when you look at Po Huat, about half of the total assets is in cash. In the case of Lai Hian, it's a bit lower, but it's still a very significant part of the assets are in cash. And when you look at the past decade of performance, they have a very good track record of generating positive cash flow from operations. So while they may be facing what I call profits and revenue pressures from a cash financial position perspective, they have enough cushion, okay, to ride over the next 2 to 3 years that period. Okay, they're not going to go bankrupt. Okay, to put it more directly. So when you stand back and look at the options available, I think there are some options for them to absorb some of the tariff. They have some leeway. Okay, maybe they can absorb 5 to 10%. Okay, but that would mean having to get the tariff down to 10%. Okay, so they absorb half. The U.S. party absorbs, half, or they pass maybe one third. One third they absorb, one third the U.S. party absorb, and one third they pass to the consumers. Okay. I suspect that what they would do is absorb some tariff, wait it out, and see whether in 3 to 4 years' time, if there's a change in the Congress, maybe some of the tariffs measures may be reversed, or we may get more favorable treatment. Okay? And the good thing is that I think they have the financial strength. Okay, even if they decide to run at a loss for the next 2 to 3 years, to wait it out. Okay? The non-US markets, I suspect they will explore. I don't think it'll be simple. Okay, because it would then be also at a more competitive, because they're going to go in and fight with existing players, so they don't have any advantage. Okay, shifting production. If you got a friend in Singapore, a furniture factory in Singapore can work with you, I suspect they may want to do that. But again, it is not going to be a long term, because the US is going to monitor, and I think Singapore government is say, hey, you cannot do this, because eventually the US will impose high tariffs on Singapore. So this is something that they can do over next couple of months. After that, they're going to stop. But it is a stopgap measure. Okay? And especially like Po Huat, who has both a Vietnamese and a Malaysian operations, I suspect what will happen is that they will shift all their Vietnamese production to Malaysia, okay, and ship from Malaysia rather than ship from Vietnam. Okay, so that's something available to Po Huat to minimize the immediate impact. Okay. Invest in the US, I don't think they got the financial means to do that unless they actually go into the joint venture. So I was telling you about my experience in the 90s. Investing in the US is investing in a different country, different labor laws, different thing. And so most Malaysian companies, unless you actually have a track record of investing overseas, investing in developed countries, it is not even an option available. Okay, so it is a tough sector, tough position. Okay, both companies are financially sound. Okay, you want to absorb some of the margins. Okay, not enough to absorb it to see it through or the short term. Okay, and what you want to do is hopefully that the ASEAN region, I think, would then go and negotiate. If what the Malaysian government says is correct, that our actual import duty is only less than 5%, and if they can negotiate down, that might give you some breathing space. Okay, so that they can absorb a lower loss. But in any way, it's not going to be zero tariff. Okay, so it's a question of relooking at different sectors. If they have not looked at efficiency before, they now have to actually relook at it and say whether there's anything they can do. Okay? It's a tough industry to be in. Okay? Now, as I said earlier, the tariff war has affected both the discount rate and the cash flow. Okay, I've given you an indication of what is happening to the cash flow. Okay, if I was a furniture company owner, okay, and I'm going to lose all my business, okay, the thing that goes through my mind is, am I better off, shutting down my factory, appealing to the Malaysian government for support in the meantime, okay, because I can't afford to run and absorb the loss. Okay. Or if I, like Po Huat, my book value is $2 a share, okay, am I better off to close the factory, return all the money to shareholders? Let's all say, hey, let's not do this business. Okay, why is the market price at $1 a share when my book value is $2 a share. Let's sell off all my assets. Half my assets, like more than half of my assets, like cash. Okay, the plant and machinery, okay, is only about 10-15%. Okay, I can hold on to my properties for a better price. Am I better off closing down the business and change into a new business? Because I say that is because that's what I did years ago when we decided to close down our appliance business because we couldn't fight against China and says, look, we don't want to do appliance anymore. Let's pivot into property. And today, looking back, we are better off than if we had continued with the appliance business. So the furniture business, the owners should be exploring this way and say, I got $2 a share. Okay, my market price is $1 a share. If there's no future in the business, why am I continuing to pursue this? Why don't I take my $2, pivot to another business that can give me a better returns? Okay, now I may lose a bit of money initially, but I think I'm better off than losing money over the long term if I can't find a long-term solution. So this is one of the things that makes me say, hey, the how do you then value such companies? Okay, trying to look at the business value may not make sense then. Okay, and especially in a situation where you're going to have losses, the size of the loss you're not sure. Okay, and whether it's going to be 2 or 4 years losses you're not sure. Okay, and you don't have an option to improve efficiency. Okay, so if the business is going to be bad, okay, for a long term, okay, is it time to get out of this? And that's where when I look at the value, okay, I thought maybe the asset value is the better way to start thinking about it. Okay, because when you look at what they are trading today, they are both trading below their book value. Phu Hoat is trading at about its cash value. Okay, Lahen is trading a bit above the cash value. So if you are a Phu Hoat shareholder, okay, and the company comes to you and say, hey, do we continue with this business or do we pivot and look for another? Do we diversify? Or if the company says, shall I just wind up the company and return all the money shareholders? I will tell you, I will vote and say, return all the money to me. Okay, give me the $2 per share, okay, rather than the market price. Okay? So I think that the because of their asset base, okay, forget about the business. I'm saying because of the asset base and so on, I would like to think that the value of these two companies, okay, the market is undervaluing it because the market is looking at from them from a continuing business perspective, okay, and say continue with this business. Okay. Now I'm saying that if I'm an entrepreneur and they are run by entrepreneurial people, okay, there is always an option to say let's pivot. Okay, shall we go into a different industry? If the furniture industry looks like the tin mining industry, can you imagine when I was small, in the 70s and 80s, the Malaysian tin industry was the biggest. Look at the MMC today. Look at Timah Langat today. Nowhere. Okay, so the question you would ask is the Malaysian furniture industry, okay, going the way of the tin mining industry? Okay. Well, if the tariff goes away, then we are not. Okay, but if the tariff doesn't go away, then I would imagine that some of the companies should start thinking in terms of going into other more profitable business rather than stay into the business where you have no track record improving efficiency, your exports, you're going to compete with Vietnam and China, okay? Because I suspect Vietnam will also negotiate down their tariffs eventually, okay? I don't know about China, okay? And because of that, I'm still holding on to my furniture shops. Okay, I'm not sure how it goes. I think it's too early to tell. I think it's too early to cut loss because the way I see it, I'm not sure how the industry will go one way or the other. Okay, and I don't want to cut loss and then regret and say, I just hang on, because in 3 months' time, Trump is going to change his mind and everything goes back to normal. So that's basically my thoughts. I don't think we are any nearer where you are. But I will tell you that in the short term or the next year or so, I don't see Pohot and Laihan becoming more profitable. Okay, they are going to be hit, and that's the reason why I think their performance, okay, relative to the non-US companies, are going to move towards the left. And I suspect that the market may overreact as well, because when they start announcing losses or decline in revenue and so on, the market may overreact, and then some of the people with the less holding power would sell, and then the share price will be affected as well. So I expect them moving in this direction, more risky, less business performance. So that's my take. Like I said, it is my view on what's going to happen to the sector. Not a very, what do you call it, positive picture, I think. But for those of you like me who have bought them not at a high price, but not at the peak, okay, I would suggest that let's wait and see what happens for the next 2 to 3 weeks, because if I listen to the news today, the US may be reaching a stage where they are now going to be much more, what's the word they use, reasonable in terms of trying to set some of the tariff barriers and so on. And they may give us, especially the furniture sectors, more breathing room in terms of negotiating with their counterparts in the US in sharing tariffs and passing some of the costs. So that's all I have. For those of you who wants to know more about the furniture sector, download the app. And I'm very sad to say that I think, unfortunately, we have yet to see the impact of the performance. So the app will just show you what has happened over the last 3 months. You probably have to wait until June before we see the first financial impact on these companies. All right, thank you.
Okay, thank you, Dato. So, well, hopefully, a few weeks from now, the market will be more calm. Okay, so hopefully we will see at least some reversal from here. Now, for those who are still with us, do let us know if you got any questions for Dato, so that probably he can answer. Okay, you can actually ask any questions regarding fundamental mapper. Okay, which is I think just now Dato have show us, okay, with 2 companies, or maybe anything regarding US tariff, especially in the furniture sectors. Okay, do let us know if you got any questions. Okay, if let's say there's no questions, we'll have Dato back again 2 weeks from now, Dato.
Yep.
Okay. So if there's no questions from the audience, once again thank you for joining us, and we will see Dato again 2 weeks from now. Hopefully by then, market will be much more better compared to now, and hopefully we've got more opportunities. Okay, thank you, Dato, and thank you everyone
Okay.
for joining
All right.
us.
Good night.
Good
Sit
night.
tight. We're living through challenging times.
Yeah.